Imagine you've finally decided it's time to learn how investing works. You open YouTube and search for, "How do beginners start investing?" Within seconds, you're bombarded with completely different opinions. One video says, "Stocks are the smartest way to build wealth." Another claims crypto is the future and anyone ignoring it will be left behind. Then you see a Forex trader showing luxury cars and screenshots of huge profits. Now you're sitting there wondering which path actually makes sense. Should you learn stocks? Should you learn crypto? Or should you jump into Forex trading? The truth is that most beginners ask the wrong question. They ask, which market can make me the most money? But a much better question is, which market should I learn first? Because investing isn't just about making money. It's about building knowledge. It's about understanding risk. It's about developing habits that can help you grow wealth for years to come. And some markets are much better teachers than others. So today we're going to compare stocks, crypto, and Forex. We'll look at how they work. We'll look at their risks. And by the end of this video, you'll have a clear idea of where beginners should start. Let's begin with stocks. When you buy a stock, you're buying a small ownership stake in a company. That means you become a partial owner of businesses like Apple, Microsoft, Amazon, or thousands of other companies. When those businesses grow and earn more money, their value often increases over time. As a result, stock prices tend to rise over the long run. This is one reason stocks have created so much wealth throughout history. Many people assume millionaires spend all day trading on computer screens. But that's usually not true. Many wealthy investors simply bought good businesses and held them for years. They allowed time and compounding to do most of the work. Compounding is one of the most powerful forces in finance. It allows your money to earn returns. Then those returns begin earning returns as well. Over long periods, that growth can become surprisingly large. That's one reason stocks are often considered a beginner-friendly investment. Now let's talk about crypto. Crypto is very different from stocks. When you buy cryptocurrency, you're not buying ownership in a business. Instead, you're buying a digital asset. Some cryptocurrencies are designed to function as payment systems. Others support blockchain applications and decentralized networks. And some exist mostly because of hype and speculation. There's no doubt that crypto has created incredible success stories. Early investors in major cryptocurrencies saw gains that seemed almost impossible. Some investments multiplied hundreds or even thousands of times in value. That's what attracts so many people. But there's another side to the story. Crypto can be extremely volatile. Prices can rise rapidly, but they can also fall just as fast. An asset that gains 50% in a short period can lose 50% just as quickly. That level of volatility creates opportunity, but it also creates risk. For experienced investors, volatility may be manageable. For beginners, it often leads to emotional decisions. People buy because they're excited, then they panic and sell when prices drop. As a result, many investors end up buying high and selling low. Now let's move on to Forex. Forex stands for foreign exchange. It's the market where currencies are traded against each other. Traders buy and sell currencies like the US dollar, euro, British pound, and Japanese yen. The Forex market is enormous. Every day, trillions of dollars move through this market. Banks, corporations, governments, and investors all participate. Because of its size, Forex attracts traders from all over the world. One reason Forex is so popular is leverage. Leverage allows traders to control large positions using relatively small amounts of money. At first, this sounds amazing. Imagine controlling a $10,000 position with only a few $100s. The potential profits look very attractive. But leverage works both ways. It can increase gains, and it can increase losses. A small move against your position can quickly erase a large portion of your account. That's why many new traders struggle in Forex. The problem isn't that Forex is impossible. The problem is that beginners often underestimate the risks involved. So now we have three different markets: stocks, crypto, Forex. All three can make money. All three have opportunities. But which one should beginners learn first? To answer that question, we need to think about what beginners actually need. Most beginners don't need maximum profits. They need education. They need experience. They need a foundation. And that's where stocks have a major advantage. Stocks naturally encourage long-term thinking. They teach investors how businesses operate. They teach patience. They teach diversification. And they help people understand how wealth grows over time. Those lessons are incredibly valuable. In fact, they remain useful no matter what market you eventually choose. Think of investing like learning a sport. You wouldn't start by attempting the most advanced techniques on day one. You'd begin with the fundamentals. You'd learn the basics. You'd build confidence. Then you'd gradually move into more advanced skills. Investing works the same way. Stocks are often the best place to learn those fundamentals. Once you understand investing principles, exploring other markets becomes much easier. You'll understand risk better. You'll understand market psychology better. And you'll make decisions based on knowledge rather than emotion. Let's look at a simple example. Imagine someone invests $500 every month into a diversified stock fund. They continue doing this year after year. The growth isn't exciting at first. The account grows slowly. But over time, the effects of compounding become more noticeable. Years later, that person has built a meaningful portfolio. Not because they found a secret strategy, not because they got lucky, but because they stayed consistent. Now compare that to someone constantly chasing the newest trend. One month, they're trading crypto. The next month, they're trying Forex. Then they're jumping into another opportunity they saw online. Without a strong foundation, many people end up moving from one strategy to another without making real progress. That's why many experienced investors recommend a simple progression. Start with stocks, learn long-term investing, understand risk management, build strong habits. After that, explore crypto carefully if you're interested. Treat it as a higher risk portion of your portfolio, and approach Forex only after you've developed the skills necessary to manage risk effectively. Because the goal isn't to find the fastest way to get rich. The goal is to build financial skills that can serve you for decades. Markets will continue changing, new technologies will emerge, new opportunities will appear. But the fundamentals of investing remain surprisingly consistent. Patience matters, discipline matters, risk management matters, and understanding those principles gives you an advantage no matter what market you're in. So if you're starting from zero today, focus on learning stocks first. Build your foundation, develop your knowledge, learn how investing really works. Then expand into other markets as your experience grows. That approach may not be the most exciting, but it gives you the best chance of long-term success. And in the world of investing, long-term success is what truly matters. If you found this video helpful, make sure to subscribe for more investing and personal finance content. And let me know in the comments, which market interests you the most right now? Stocks, crypto, or Forex? I'd love to hear your thoughts.